and welcome to Welcome Home Radio. The waters in the mortgage industry can be pretty muddy, whether it's investing, leasing, renting, home insurance, or myths and misconceptions. Welcome Home Radio has the answers for you, the consumer. And now, to help you make the right home buying decision for you and your family, here are your hosts.
And welcome to Welcome Home Radio. It is August 19th, and this is where real estate lending and learning come together. This is your mortgage market update for August 19th. Stocks are pointed higher today after seeing the S&P set an all-time high yesterday. Interest rates increased slightly, but are still at all-time lows. And in the economic news, housing starts in July rose 22%, which is a very strong and much stronger than estimates. Year over year, starts are up now 23% from being down 4%. Single family starts were up a solid 8%, and single family permit requests are up 17%. So the MBA released their mortgage application data, which kind of falls in line with this. Overall application volume fell, but an interesting point is purchase applications increased. So even with that increase in starts, permit supplies remain extremely tight. Builders are pulling back. Most people are not downsizing, upsizing, or right-sizing, and means demand is still very high. The U.S. market would need to have 1.6 million single-family homes built per year to catch up to the demand level. Well, today's topic could help some of those folks looking to get into getting out of the rent race, out of the leasing cycle, and into a home. And joining us today, as always, is my wonderful friend Alan Pace with Fathom Realty. And with us today is Robert Stephans, Senior Vice President of Construction Sales of GSF. Welcome, guys. So glad to have y'all here today.
Good to be here.
Well, Tom is going to join us a little later, but our topic of construction solutions with standard mortgage options, I'm real excited about this, Robert, because so much has been said. And right now the data is pointing to there are more people coming into the market than there is availability. And builders aren't going to up their numbers right now just because they don't know where the business community is going.
Right.
So the solutions out there are these lakeside properties, these out of town or land purchases where they can do actual construction.
Sure.
So help us understand a little bit about GSF and what you guys do so that our listeners have an idea.
Blair, again, thank you very much for having me. It's always a pleasure to talk about single close construction lending. And, just to kind of hop on your coattails there when you were talking about home starts, I think I read a number this morning from the National Home Builders page on LinkedIn. I think we're on pace for about 900,000 starts per month on an annualized basis. So what's wrong with that number? Absolutely nothing. So we should be able to get a piece of that pie, in my opinion. And single close construction lending will drive that home. Now, it's not for everybody. It may not necessarily be for that self-employed individual who might be putting 20 or 30% down, but for a conventional buyer with 5% down, FHA, 96.5% loan to value, and my personal favorite, VA and USDA.
Hey, Robert.
Yes, sir.
Just real quick, can you define it, like the definition of what you just said, single close?
Sure.
A lot of people, I think that, when they borrow money from a bank or something to build a home on a lot, they get a little bit at a time and a little bit more at a time. And
right.
That's kind of what everybody's used to. Can you just define that so we have a base?
I'm happy to do it. So single close construction lending is exactly that. The loan closes once versus a traditional I refer to it as a traditional construction loan where you would have two closings. So on a traditional construction loan, you would close on, let's say, a line of credit. The home would get built with a variable rate of interest, and then you're going to be locking in your permanent rate perhaps 9 months down the road. Well, with single close construction lending, it takes the worry out of construction lending. It closes once. The terms are predetermined. Your interest rate is locked in. It's a secure loan, especially for that first-time home buyer. And as I mentioned, a veteran purchasing a newly constructed home with $0 out of pocket.
Can I being in this industry only 6 years, I'm very excited about this for the reasons that since I've been in, every time I talked a one-time close solution with anyone, everybody had to come to the table with 10% down. I mean,
Sure.
It was like, that is the standard.
Right.
And I'm hearing what you're saying now is, hey, we can do a standard FHA 3.5% down, or a conventional at 5%, or even a wonderful blessing to those veterans out there, 100% financing.
That's right.
On a single close construction loan. Is that what I'm hearing?
You're hearing me correctly. And let me add to that, the borrower, the veteran. Let's stick with VA for an example here, because the structuring process of the transaction, a single close construction loan, how you structure the loan, it's exactly the same across the board. So FHA, VA, USDA, conventional, you're going to follow the same process. So the program also allows, in this particular example, the veteran to purchase the land from a third party. So private sale as far as a lot is concerned. So we take the price of the lot, we take the total cost of the construction build. There are some construction fees as far as the loan management fees are concerned, because we're going to be with that borrower and builder for probably up to 9 months. We add all of that together, and that's what the loan to value is based on. So VA allows 100% loan to value. We can do that. So no money out of pocket for the veteran.
And I want to stress our listeners, that's talking down payment and all of that. Still dealing with escrows, still dealing with any closing cost, but no money out of pocket down payment wise and or during the build time.
Well, and let me just jump in with what you said there as far as the closing costs and prepaids are concerned. So you're exactly right. I mean, closing costs always have to be dealt with, but the program allows, in this particular case, the home builder to give an additional credit at the time of closing to take care of those fees.
Wow.
So yeah, if the deal is negotiated correctly, and I think at, where we are today with interest rates, why not? Let's roll as much in as possible. And
is that the same type situation as seller contribution on a regular deal? It has to appraise for the money that they borrow?
That's exactly correct. Yes, sir.
Okay.
Yes, sir.
All right.
Now, one of the things that amazes me when, again, going back to my start in this industry, is one time close, 10% down. Then of course we're paying interest on dollars given during the construction period, let's say 6 months, 9 months, whatever it may be. And then that close is taking place. We could have locked the rate and everything, but I'm paying that throughout. Now, as I understand it, with your solution that we are so blessed to Highlands to be working with you, is I can use the VA solution, the FHA, the governmental solutions. I'm paying no interest during that construction time. Only on the conventional am I paying. Is that what I'm understanding?
Yes and no. So on our government options, USDA, FHA, and VA, the borrower, they're not making a payment on a monthly basis. However, there's money out on the table. You got to get a little, right? So there is interest charged during the build period, but it's how we deal with it. It's added back into the transaction.
Okay. So I wanted people to understand that you're still paying that, but it can be deferred to a later period and or at the end of the loan.
It's the only way we allow it to happen. And the other reason behind that, we understand that during construction, your FHA, first-time home buyer, VA, USDA, they have to pay to live somewhere while the home is being built. So I don't think it would be prudent lending if we required that buyer to make a payment during construction, knowing that they're probably paying rent somewhere else. So that's the other reason behind that. And then I also want to mention, VA does not allow the veteran to pay for anything they can't occupy. They can't occupy a home under construction. So we wouldn't even be able to charge the veteran the interest if we wanted to.
Now, Alan, I mean, in the market we are today, and people, I kind of said it in my monologue there, we're not right sizing, we're not upsizing, we're not downsizing. Do you see the solution being more and more drawn to be able to buy some land somewhere and build that custom home they desire?
Well, I think it's relief. A couple of things. We're definitely in a seller's market. Inventory's low. Homes that are, upgraded and nice and ready to roll, they go 6, 7, 8 offers now, just like it was in 2017.
Yep.
The average home is still struggling a little bit if it needs work, and that's kind of more traditional. But with the stress on the market, this is a wonderful way to, to do something different. And a lot of people don't know this is even available. So This show's important, and people need to understand, what Robert's telling us. The other thing is there's a bunch of folks trying to get out of cities now. We're not just talking about, the Dallas-Fort Worth area. A lot of people moving here for jobs and things. But, look what's going on nationwide. People are fleeing some of these cities, and all of a sudden the country looks good. And this solution for a loan, once I think it gets out there, I will assure you, I don't know many people that know about this, one closed solution. And so I think its timing is perfect. And I think there's a lot of progress that's going to be made here. And I think it's going to be made in a short amount of time, personally.
Well, that is great. And anybody listening right now, you can comment in the comment sections. You can call our number. It's going to come up here and just on the screen in just a second. Call in, ask your questions, text us. We're live right now with Robert to be able to answer those questions. And we're going to be going into depth about the loan program and about how the process takes place. So understanding that we all agree the demand is there, but the solution is unique. It's not known. One of the things that I know about construction loans is, hey, you got to have that GC group out there. Now, Robert, you in doing business with these people, you want to know who they are. So any GC that's going to use this loan program has to be pre-approved with you. Is that correct?
Well, yes. And you bring up a very good point. So again, it's a single closed loan. The loan is closed. We have an obligation to the borrower and the builder to make sure that property is built. We're actually keeping that loan in our portfolio during construction. So there's a lot of risk. We got a lot of money out on the table. We have commitments to the borrower, as I mentioned, commitments to the home builder. In the rare circumstance, the home builder doesn't complete the property, or, we hear stories in the news from time to time, the builder skips town. Not saying that it's going to happen, but what if it does? Again, we have that commitment to make sure that home gets built. So we're definitely tied into this transaction to make sure the property is completed in a timely fashion.
Yes. And the biggest thing that I think is a part of this is, as a person that is, hey, I'm looking just to get into a home, we want to have it our way, but we have the resources. If just doing the lending portion, we have access to GCs that are available to build these, whether it's conventional, VA, FHA. And there's certain unique requirements for different solutions, the biggest one being the VA. Is that correct?
Right. Well, it's actually one of the, if I could just jump ahead for a moment,
Sure.
One of the other benefits that we bring to the table, other than just offering the program, we manage the entire process from start to finish, including the builder vetting process. So to answer your question, are there additional requirements for perhaps a VA home builder? There's one. The builder has to be registered directly with the Department of Veteran Affairs. I'll always ask for the VA builder ID. Now, I've heard it's a relatively quick process for a builder who might be lacking that ID number.
Relative?
10 days. 10 days is what I've seen.
Okay.
So that aside, the process that the builder would go through, whether it's FHA, VA, USDA, or conventional, with what we do, it's exactly the same.
Awesome. And see, anybody listening, any realtor listening, any GC or client, you can actually get involved, call us, let's get this situated so that I just see it's an amazing opportunity for architects right now that wanted to just design for a client, but then have it built. And like you said, Alan, getting out in the country, hey, I want some acreage between me and my next door neighbor.
Right.
And I hear that so often. But I can build that custom home that mom wants. I can build it, I can have the second story with just the kids, mom and dad downstairs, whatever it was, the key requirements. We can do that with this solution, but you don't have to come to the table with extra things. I just see this as so simple, but we do have to have a GC available. Now, getting them qualified, getting them approved, how long does that process take, and where do they come from? I mean, do they come from people like myself, or do they get just in contact with you? You have them across every state. What's the makeup of that?
Yeah, so typically the way a transaction would look, you're the captain of the ship. So you're forming the relationship with the realtor, the home builder, the borrower. So you're driving that. Typically, the builder won't come directly to me. You're their first stop. But then we assist you with the entire process. So timing wise, you're probably looking at 10 to 15 days for that vetting process to be completed. And here's the reason why. We rely heavily on the quality of the builder's work. So that's a big win for your borrower, right? You want to know that your builder has been properly vetted, that they're going to build you a quality product. So that part of that process that we put the builder through, if you will, we're checking references. We're checking with past customers to make sure the home was completed on time and the borrower was happy. The general contractor pays their subcontractors on time. We're going to verify that as well. That's a biggie for us. Quite frequently, a builder will submit all of their financials to us. We actually turn around and send them back. We're not interested in how the builder reports their income. We're interested in, are they building a quality home? Do they have satisfied clientele?
And
Are
let me
typically 6-month to 12-month type operations, start to finish?
Yep. So it broke up a little bit there. I think you were asking about the completion time.
Yeah, is it like a lot of the builders, it's 6 to 9 months, materials and labor and all sorts of stuff going on. But, I've done some builds on lots as the realtor working with another builder to help one of my clients. And it took a good 8 months. They had to build a bridge to get to a lot. They had to, put the foundation, all this stuff. It takes time. So is that typically what you're seeing, 6 to 9 months?
So, we talked about the permitting in the beginning of the show.
And that can get ugly too.
Not 900,000 permits on a monthly basis, give or take. So, there are some delays in the marketplace. Our program requires that the home be completed within 9 months from when the construction loan closed.
Okay.
So let me take a step back, because I want to make sure our listeners understand something that you said was very important, and it was glossed over very quickly. A GC who does not pay their subs, guess what happens, Mr. Homeowner or Mrs. Homeowner? Liens can be put on your home if the GC doesn't pay that subcontractor. And that could be an electrician or plumber, but that's critical to you, the borrower, because guess what? That's a lien against your house that could be collected once refinanced or when you're selling. And that would be a total surprise. They don't have to contact you to put that lien there if it's an official document through the judge. Ultimately, you do, but it can be a total surprise to most people.
Yep, that's right, Blair. Good point that you bring up. Absolutely. So again, getting back to that vetting process, some folks will, I don't want to say they would complain, but why is it taking so long for my builder to be vetted? Well, we needed to make sure we completed our reference checks. There was a delay with, the individual we were calling, getting back to us. It's a process, but the process is there for a reason. And if it does take a little bit longer, listen, I'd love to get them all done in 5 days. That would be a win, right? But that's why we give that little bit of extra time. We just want to make sure we do our due diligence to make the home buyer happy.
Now, what happens, Robert, if after this show, Alan goes, Blair, I've got a client, I need to do this. They don't have a GC. I don't have a GC. Robert, do you have people that we can turn to that you've already certified that would be in our area to be able to build as well?
So I'm going to use you as an example, Blair, and you tell me how you would want this handled. You did your due diligence. You did your sales calls. You went out. You met with a bunch of home builders. You had them complete the application process. We got them approved. We got them vetted. Now, Jim down the street, who works for ABC Bank, asks me that question. Hey, do you have a couple of home builders? You would not appreciate it if I gave them your list. So what we always like to do, you could check with us to see if we already have a home builder vetted, but I'm not going to hand that list out because
I'm not asking for a list. I'm just saying if Alan brings a client to me,
right,
and suddenly we have a situation, I don't have a GC, they don't have a relationship with somebody, but we want to build a home. Sure. I'm just talking about, I'm not asking for me to reach out. I'm just saying, let's help out this client get their home built.
No, absolutely. So yeah, I just wanted to wrap up my thought on this, or my comment with regards to your question. We have a list of builders that we've already vetted, but we're not going to allow the borrower to utilize that list. What would have to happen is we need the name from you. We need the name from the borrower, because we protect and respect how that list was built.
That's fine with me. I have no problems. I think it's important with our listener base that they know that if they don't have a GC relationship, or if I don't have one, we can still go through this. It's just that one issue can be overcome. It's not
from the realtor perspective. The way we've done it over years is, we have a relationship with our own builders. We're constantly talking to them on LinkedIn or Facebook, or, sure, having dinner some night or whatever. So we all know builders. And then also most of your major builders have a division for building on a lot.
That's right.
And they need a loan. And, if I was in the business of selling these loans, and that's what we're talking about, making money, then I would be at every lake in this state that has lots around the lake. I'd be talking to those folks. And all these builders, what Robert's offering, it's like another gun in the holster. Instead of having one, now they got two. And I think it's got huge potential, but I'm telling you, nobody really knows about it.
Right.
They really don't know about it. And so this is a good show. We're all going to learn something today. Probably Robert won't, but I know Blair and I will. So
I will.
I've had a lot of good dealings over the years with national home builders that have built homes for my clients, but the clients had to come up with their own money. And a lot of traditional lenders don't have an answer for them. So this is a really nice thing we're talking about here. Good.
Moving forward, we got the situation we're going through. We closed the loan. Let's say a VA loan. I'm very focused on them.
Sure.
Understanding we're locking a rate that's going to possibly close 6 to 9 months from now. Help our listeners understand how all that, you say rolling in, is there a rate increase and then the lock rate is somewhat lower? I mean, how does that work? So to help them understand that process.
Right. So remember the name of the program, one-time close, single close. That means the terms are determined in advance of that closing. The borrower is signing a note and a mortgage on the day of closing. Now, behind the scenes, there's two components to the loan. There's the line of credit, if you will, to get the home built.
The construction piece.
The construction piece. But that end loan in a permanent loan, we're not closing again. The borrower is modifying, taking the loan out of the construction phase to the permanent phase based on the terms that were predetermined in the beginning.
Yes.
So the rate You can look the borrower in the eye and say, this is exactly what your principal and interest payment will be 9 months from now. In the event rates are lower, the lender, GSF, will float the borrower down to the lower rate at that point in time.
Wait a minute, time out. Say that again, Robert, and say that very clearly for people to understand that.
Absolutely. With our program, you're locking in an interest rate today. Your rate will never be any higher. However, 9 months from now, when the certificate of occupancy is issued on the home, you're ready to move in. Everybody's excited. The home is complete. We have to modify the loan to permanent financing. And one of the checks that we take care of is if rates are lower with that program, 9 months from now, we float the borrower down. If rates are higher, the borrower is protected. They stay at the locked rate.
It's locked in. That is so huge. I mean, my goodness, that to me is that's a kind of like a gamble bet guaranteed, because you already have your locked in rate, but if it is lower, I'm going to be able to go that lower amount. Not many people do that.
That's right. And just a couple of other things, features of the program, I just want to make sure I mention, because it's certainly important to the home builder community and the realtor community as well. The home builder's money is 100% guaranteed. So the builder needs to understand there might be some additional risk in the very beginning when signing a contract and you're not taking a deposit. It's 100% financing, right? But once that loan is closed, all the builder has to do is build that home. Their money is 100% guaranteed, because the borrower is not required to make payments during construction.
Again,
no risk.
That to me is a huge piece, where the old construction loan / one-time close solutions that I used to work with, you're always worried about, okay, what's the finance charge? Are you based on LIBOR? Here's this period during this, and you're paying interest only. And then we're going to your close, and this is locked in. No matter what's happening in the market, it's locked. And by the way, you are bringing 10% down, and this is the solution. I mean, that was the cookie cutter solution.
Yeah, and let's talk about, it's a black cloud, if you will, in construction lending with regards to a 2-time close construction loan. The borrower would have to qualify twice. They qualify when the construction loan closes and their permanent loan. Well, what happens if they had something change in their employment, their credit? They may not be able to close on that permanent loan. The builder is stuck with the home. The borrower is highly upset. This program removes all of that risk.
So they can actually go out and buy that new vehicle they want to after they've closed. They can
light it up. Go finance that furniture at Rooms to Go. Not a problem.
So you see this happening now. How long have you been in the business?
Actually, it's funny. I market heavily on LinkedIn, and I just loaded a video the other day referencing my resume. My first job in banking was 1989.
Wow.
Yeah.
That's
Had a lot of hair.
Back then?
Back then.
Well, I still remember 1989 very clearly. I was in Germany serving, so that's an interesting year for me. But so what have you seen changes, and why are you so excited about these solutions? What do you see as the key benefits, whether it be conventional or FHA or VA, USDA?
Well, you said the word solution, right? It's a solution to, again, my opinion, the construction lending market prior to the single close construction program becoming popular, it was real glitchy, if you will. The terms were not predetermined. There was a tremendous amount of additional risk, if you will. Who knows when, I don't think we're going to be in a rising interest rate environment for quite some time. But prior to a single close construction program, if you wanted to build a home, you had to have 20% down. You were not locking your rate. you're locking your rate 9 months down the road, right? Just a lot of unknowns, if you will. And with this program, once it started getting some legs and started becoming popular, all of that risk was removed. Here's how I look at it. I look at the single close construction program as a regular purchase transaction with a couple of additional steps: the vetting of the builder and the calculating of the budget. Once that occurs, you have a regular loan. There's nothing different about it.
With everything I'm hearing right now, I see all the benefit for the borrower. And Alan and I love that our client. But tell me why a GC likes this program. Tell me what from their side is the benefit and why they would want to be a part, because it sounds like there's a lot of risk on there financially, as well as, I know they're 100% guaranteed the money, but they've got to build in their cost, I guess, or interest.
Well, sure. So that's the second step in our process. So the builder's vetted, that's step one. Step two, we look at the builder's budget for this particular project. And at that point in time, it basically the cost breakdown is calculated. You know, what's it going to take to build that home, as I like to describe it, from dirt to keys in hand. We take a look at that bottom line number, the cost of the land as well. We obtain an appraisal before closing. So we know in advance of closing if the numbers are going to work. Once that loan closes, all of that risk, as far as the home builder is concerned, in my opinion, is removed, because their money's guaranteed, the loan is closed, they just have to build the house.
So you don't allow the GC to make a mistake when he's trying to do his budget.
We refer to it as a fixed priced contract.
Okay. Gotcha. Well, I've been doing this long enough, been in every kind of deal there is, and inevitably something does go wrong somewhere along the line, and not everything is hunky-dory and perfect. So in your experience, I don't know if you've done many of these yet or if it's just brand new or what, but are there any financial shortcomings with mistakes made at the beginning? And,
Sure.
Labor, most builders, in every builder contract I've ever done, it's got a bunch of protections in there for the builder, and, not very many really for the buyer. So that it's got to be done. The buyer has to close when the builder's ready, but the builder doesn't have to be ready until the builder's ready. And there's a lot of things that go into that. Material shortages, permitting is, like you said, it's getting really tough.
Right.
And so what's there for everybody to be protected? Because there's, instead of just two people involved in a process, a builder and a client, now there's more legs in that thing. So how is everybody protected? I guess if something should go wrong, somebody made a mistake at the beginning, you don't have as much money as you thought you needed, and how does that get worked out?
Love the question. That's when it comes to our due diligence process in the beginning. We have to make sure we're dealing with the right builder. They understand the program. They understand that the contract needs to be a fixed price contract. In some certain circumstances, we find that the home builder may build in a contingency for some of those items where maybe they can't buy them today. They're going to be purchasing them 6 months down the road just due to the construction schedule. So, they may find that they can build in a slight contingency to insulate themselves, if you will, against any market fluctuation as far as those items are concerned. But it really boils down to that vetting process in the beginning, that we're dealing with the right home builder. I'll give you a quick example. I actually had a builder call me the other day, which is somewhat out of character, because remember what I said, Blair, you're the captain of the ship. That's your client. The builder reached out to me directly and very wishy-washy. Well, how do you expect me to finalize this budget? I don't know what the material costs are. Right there, that builder, it's not for our program. It's not
Doesn't know
for
your
the veteran. It's not for the FHA buyer.
They don't. If you don't know your business, then you're not going to be able to utilize this program or
Bingo.
maximize what I hear.
Bingo.
You know, to me, I guess what I wanted to go through, and great questions, Alan, but I want to make sure we all understand, and our listeners understanding this ultimate solution. We have the benefit, we have the value, but here's where we're at. I mean, is there anything unique outside of a normal mortgage experience for the borrower? Is there anything that is different than what they would have to do for a normal loan?
Fantastic question. So here's where it's going to look slightly different for a short period of time. We need the builder vetted first. So if the borrower is excited and they find a piece of land for sale, and now the seller of that lot says, hey, listen, lot sales can typically be done in 15 days. You good with that? The answer would be no, because we have to close everything together. So the borrower, the builder, the seller of the lot, they need to understand what we're dealing with. We're dealing with a single close construction loan. So the borrower would negotiate the contract with the seller of the lot. I typically always recommend a 60-day close, 60. We need to be ready to go with that builder. It's going to take 2 weeks, as I mentioned, to vet the builder. The builder needs to have their budget ready. So once that builder has been vetted, now we already know we got 60 days on the lot sale. The builder will be vetted. We make sure the budget is fine-tuned. Those numbers get added together. That's when the appraisal is ordered. So by now, we're probably 3 weeks in to everybody getting excited about what's happening. Once that appraisal comes back and we know that value hits and we're good, now we're moving very quickly to get everything closed. And then from that point, the builder has 9 months to complete the project. But also, I should mention, on that day of closing, we disperse 100% for the cost of the land. So now the seller of the land is satisfied. They're on their merry way.
Sure. Now, what happens, and I know it has to happen because any chance there is, sometimes there's going to be, the construction takes a little longer. We go longer at 10 months. What happens? Does that just impact the GC? Do they come back for you? Is there a contingency amount? What happens then?
So the USDA requires a 10% contingency to be built in to every USDA transaction. That's the only program with a contingency requirement. Well, let's talk about that, because you're right, it does happen. Maybe there was a delay. Let's speak to this. There's a big demand for lumber across the United States now. Yep. So other than Florida, where all homes have to be built with concrete block, we may run into some delays due to lumber across the nation. So there is a little bit of wiggle room in there if things are going over. But here's one of the benefits of GSF managing the entire process through completion. The home builder, the borrower, they're going to be in constant communication with my draw administrator, the person inside our corporate office who issues the money to the home builder. So we're going to know as things are progressing, hey, listen, I don't know if this home is going to make that 9-month cutoff. So we can discuss a plan B, if you will, at that point in time. So it's not a surprise once we get to the end of the line. Hey, the home's not done yet. What happens? We're going to know during construction.
It just seems like now you focused on USDA. What happens to my veteran that had a VA loan? What happens then to that builder or the borrower or the situation?
Right. So if the construction budget goes over on a USDA transaction, we got that 10% buffer, if you will. Again, getting back to what I said on how the contract needs to be a fixed price contract, the builder needs to sharpen their pencil to protect the interest of the veteran, to protect the interest of the FHA borrower. if there are line items in that build, I'll give you an example. We did a deal not too long ago in Colorado. The builder ran into rock issues as far as the excavating of the property is concerned, had to call in a dynamite company. That was an extra line item. So in certain instances such as that, the builder should know, hey, listen, I could be 80% spot on accurate with this budget, but hey, in Colorado, I may need a dynamite company to come in. I got to have a little wiggle room there. So we can approve those contingencies on a case-by-case basis.
Now, I just heard something. If I'm a GC and I do my fixed contract, I build that in, but then, oh, by the way, I didn't have to hit rock. I didn't bring in a dynamite. I didn't do that sort of thing. As a listener, as a borrower, I'm going, well, if you're not, the build time took 8 months. Am I getting some money back at the end, or is that a fixed price that, hey, we're done and it appraised for it, and that's builder growth or profit?
It's an opportunity for the builder to perhaps have an extra incentive on that transaction. But I can tell you that if the builder is handling everything ethically, correctly, I would have a conversation with the borrower, the builder have a conversation with the borrower. Hey, listen, we have some extra money in the transaction. The home is complete. Are there a few extra options that maybe you would like to add into the home? Is the builder, and I always try to be as transparent as possible, is the builder obligated to give those funds back to the borrower? The short answer is no. Ethically, should they do it? The answer is yes.
Okay. That's listeners. And again, listeners, you're there, call us in, text us, or put your comments there. If you have a question for us here with Robert Stephans of GSF, we're talking unique construction solutions for the market.
I don't think we need to, it's okay to make money. We're all here for it.
Oh, yeah.
And I think Robert said it right. As long as the builder is doing everything in good faith, I got no problem with people making profit. I think it's a good thing. And believe me, they're not going to be around long if they're making profit the wrong way. So the market has a way of shedding people like that. So, I'd rather have a little extra in there and make sure it's done right than not enough and not get it done. Like I said, the one of them I was involved with, they literally had to get over a creek with a concrete truck.
Right.
And we knew that going in. We knew it going in. I mean, it's everything in real estate. I don't care what you're doing. You're buying your first home or the, rentals or whatever you're doing. Everything needs to be explained up front. And you deal with every transaction has an unexpected detail in it, just about every one. So as long as you go into it knowing, understanding what you're getting into and what you're signing and the process, if that's been explained correctly, then let's make some money and have some fun and build some nice homes and make money on loans, and realtors get their whatever they get if they're involved. And, it seems like realtors really might not even have to be involved in this on quite a bit of a time. Like I said, I'd be down at these lakes with all these lots around the lakes, and I'd have those people that own those lots that are selling them on television for $75,500 if you order by midnight, come down now. And I'd be all over those people with my one close solution. And that would just give their salespeople another tool. And to me, I just see lots of opportunity there.
Well, and I love that word, opportunity, and what we could do as far as the realtor community is concerned. What about that realtor that has that dog of a house, right? It's the worst home on the block. Let's just call it a distressed property. Let's look at that a little bit differently. Why not partner with a home builder? Partner with a manufactured home dealer. Let's do some artist renderings for that distressed property. So now the realtor isn't selling this 1970 home in dire need of updating. They're selling a brand new home because single close construction lending allows for teardowns. So now the buyer buys that home, Everything was already predetermined with the home builder or the realtor, or excuse me, manufactured home dealer. It's a beautiful thing. Now that realtor is marketing that home, if you will, as a brand new property.
Big question. I know I've got to ask this before our time's up. What about, we talked about standard construction, brick and mortar, that sort of thing, but what about barn dominiums? What about modular homes? What about these sorts of solutions, double wides? I mean, are these a part of the construction solutions as well that you can offer and work with?
Traditional construction, absolutely. We refer to it as stick built, or in South Florida, where I'm located, concrete block. So your traditional single family home, no problem. A manufactured house. Clayton is a large manufactured home dealer. That works perfectly. A modular home, where it's sometimes referred to as a panelized home. That works for the program. Barn dominium, I get a lot of requests for that. Right now, it's not an available option. Somebody wanting to build a log cabin, that's not going to work. A primary residence, stick built, manufactured, or modular. That's the ideal type of a property for the program.
And how spread out is it? Are there people locally that do this? Are you the only guys that do it, or how's this all work? Who do you contact and all that stuff?
Yep. So if I could brag just for a moment on
I see Mr. Thomas. He got a
GSF and Blair. This was a unique program as far as let's take a look back at what we've been through. Go back to March. There was a lot of uncertainty with some of the single close construction lenders. There's risk involved, as I mentioned. We're laying a lot of money out. Remember, the borrower has to modify to permanent financing. So what are we kind of in right now? Right? There's a significant rate of unemployment. A lot of folks lost their job with the pandemic. Now, how's that going to look when we're calling that borrower, hey, are you ready to modify to your permanent loan? Man, they got other stuff they are worried about. That caused several single close construction lenders to pull out of what I refer to this space. We stayed constant. So relationships such as what we have with Blair, making sure our clientele is solid, securing our warehouse lines of credit so we could manage through this process. We never stopped funding. We've had record funding months as far as single close construction lending is concerned. So, it needs to be managed the right way. Sometimes we have to say no to a particular home builder. Sometimes we have to say no to a particular borrower. They're wise lending decisions so we can keep funding.
Good questions. Anything else, Alan? Any questions you got?
Well, the only thing I'd say is if I have somebody interested, I'll call Blair. And you take it from there, right, Blair?
There you go. That'll be great.
Okay,
it has been a pleasure having you here, Robert. I know this has probably been a short time, but you know what? It's been very informative, very uplifting that we see in the market, especially with application data dropping, but yet purchases are increasing.
That's right.
I think this solution is so critical to an opportunity for somebody listening. Somebody out there is desiring to say, hey, I'm done with the standard, what I'm doing. I want to get away, get that property, build a home. We want to go that route. So I hope this has been there. I know you'll be available for questions later as well, but we appreciate it. I just want to say thank y'all for listening. I'm Blair Thomas.
I'm Alan Pace.
God bless and have a great rest of your week.
Take care, everybody.